we've never seen this before. A phenomenon where world central banks have suppressed interest rates, even going negative, to keep all of this propped up. It can't last. The analogy I always use is, think of it this way, like a capsized boat. It'll float for a while upside down until it doesn't. And that's what we're facing here now.
In the 1990s, he created $1 billion copper producer. In the 2000s, he launched what would become one of the world's top primary silver producers. And in 2015, he started what he believes will be his third billion-dollar company. This is the one gold stock to research right now. Visit crushthestreet.com/investright.
Hello, everyone, and welcome into crushthestreet.com. I got a special interview with Gregory Mannarino of traderschoice.net, and we've talked to him before, and we've talked about the central banks and government and what they've done to our economy. And we know that they've created an environment of massive distortions. And he's a technical trader with a great handle on the economy. And in 2015, he called the market top. It was a very precise call. And today we're going to get his thoughts on these distorted markets here in 2016. You can follow his work for free at traderschoice.net. Gregory Mannarino, thanks for joining me.
Thanks for having me back. I really appreciate it. Your show's great. Love it.
Greg, let's talk about the stock market here, and specifically this recovery that we've seen following the Brexit. And we know that we saw a big, lots of volatility following the Brexit, but then we saw this miraculous recovery set in. And let's just start there and get your thoughts on that.
Sure. First of all, the Brexit did honestly take me by surprise. I did not believe it was going to go through. Most of the people on Wall Street did not think it was going to happen. It was quite shocking. Like as you said, it did cause a lot of issues for people on the long end of that trade there. And then you're right, we got this miraculous almost V-shaped, literally a V-shaped recovery of the market. Now, a lot of that was on speculation that world central banks would step in again and support these markets. And I think that's exactly why, and the only reason why the markets did come back like that so rapidly. But there's a lot more to what's occurring right now than just this Brexit thing. That's just one small piece of a massive puzzle, I suppose, a series of events that are happening right before our eyes, and it's getting almost no media coverage. I've been trying to talk about it. It's the yield curve, which we talked about in the pre-interview. This incredible, I don't even know another word for it, incredible phenomenon that we're seeing around the world, where investors are getting so desperate to seek safety despite where the market is right now. We see massive amounts of currency flooding in toward the debt market, squeezing yields lower, deeper into negative territory. As a matter of fact, today was historic on several fronts. Here in the United States, we had the 30-year bond yield hit a historic low. It did the same thing last week, so that's 2 consecutive weeks where the long end of the curve is dropping and to historic lows. The German Bund has fallen into deeper negative territory. The 10-year is now yielding at negative 0.18. The 30-year, negative 0.34. I think this is a major red flag for the markets. What else is going on here? The monetary metals, I'm not going to refer to them as precious metals anymore. These are the gold and silver are monetary metals. They are performing beyond what I think most people would have even imagined, even myself from the beginning of the year. Although I did say in an interview I did with Greg Hunter from USA Watchdog, which can be viewed on his site there, I did say that gold and silver were going to skyrocket this year. That was in last December. And that also played into the market top you brought up last May. I did a video. I said this was the top for the Dow. It has held this entire time. I did think there were a possibility we could break it, but the more I look at this now, I can't imagine what world central banks can do to prop up the stock market any further. What happened last week, which flew right under the radar, is unprecedented. The Federal Reserve bailed out the Wall Street banks, and it got no coverage, zero. As we all know, the Federal Reserve has required the Wall Street banks to hold excess capital in reserves since the 2008 crash event. Well, now that these banks, 31 out of 33, passed their, quote, stress test, end quote, nonsense test, the Federal Reserve has given these banks a green light to buy back tens of billions of their own shares of stock. The Federal Reserve is incredible. They're not telling these banks to invest in projects to expand the economy or grow jobs. They're saying buy back shares of your own stock. Why? Well, it's the environment we're in, where we just talked about, this negative rate environment, which is getting progressively worse, this flattening yield curve. These banks cannot be profitable in this environment, so they're going to get backdoor bailouts. That's what this was. And again, nobody is talking about it. It's quite shocking.
Greg, there's a few things that I do want to talk about in there. Let's stick with the yield curve. So, explain to everyone why a flattening yield curve is, a problem, or an inverted yield curve is a problem. And, we know that an inverted yield curve historically has preceded some major stock market crashes. So kind of, give us the picture here with what we're seeing with the flattening yield curve, and kind of what the goals of central bank are to kind of keep it sustainable here.
Well, let's start off with that. What are world central banks doing to try to keep this propped up? They have literally, and I mean literally, turned the financial system upside down. I think we might have talked about this in maybe our last talk. I don't remember, but by introducing negative interest rates, they have literally flipped the system upside down. It's not meant to function like this. We've never seen this before. A phenomenon where world central banks have suppressed interest rates, even going negative, to keep all of this propped up. It can't last. The analogy I always use is, think of it this way, like a capsized boat. It'll float for a while upside down until it doesn't. And that's what we're facing here. Now, if we go out to the yield curve, you brought up a couple of good points here. Just from a visual standpoint, if people can imagine what a real curve is supposed to look like. In other words, the short end of that curve should be on, let's say, a low, and the long end should be high because of risk. Okay, now what we're seeing on a global scale, in fact, it's negative in certain parts of the world, but here in the United States, let's stick to that. I would imagine most of your listeners are here. We're seeing this phenomenon where the Federal Reserve, I want people to think about this. The Federal Reserve is deliberately, I'm not making this up, pinning down the short end of that yield curve. How are they doing that? By keeping the federal funds rate at zero or close to zero. They're not allowing the short end of that curve to move. It's pinned down. So what is happening here at this point is the longer end of that curve, we just went over earlier how the 30-year yield has just hit a historic low today, on top of a historic low last week. So the yield curve is flattening despite the fact that the Fed is pinning down the short end of that curve by keeping the federal funds rate at zero. This is why, I mean, and it's no one talks about it on the mainstream financial channels. This is why the Federal Reserve can never raise rates, talking about the inverted curve. Now let's just put a perspective on that and try to imagine a visual. So if the Federal Reserve is pinning the short end of that curve down to zero and the longer end is coming down, what would happen, hypothetically, everyone listening, if the Fed were to raise the federal funds rate? It would nudge higher the short end of that curve, and that would risk an inversion of the curve. Why do curves invert like that? Well, the reason is because people are so fearful to be holding the longer term debt. They don't want to hold it. They'd rather hold the shorter term debt. This is when panic starts to affect the markets. And we also know what happens. We've seen it before. The dot-com bubble, we had an inverted curve. The 2008 bubble, we had an inverted curve. The Federal Reserve is very keenly aware of this. They know that they can't raise rates. So it's a farce. When you hear any of the Federal Reserve presidents come out there, you hear Janet Yellen herself talking about how they're going to raise rates. It's a lie. They can't do it. And they've put themselves into such a situation that all we're going to get now is a terminal decline from moving forward here. And we are going to continue to see bond yields. We're witnessing a phenomenon which you've never seen before. It's historic around the world, this move into the debt market, into the safety of debt, where investors and institutions are willing to accept negative returns. Think of the panic that is occurring in the bond market, and no one's talking about it because, the stock market is still pretty high right now. It's just a matter of time before the stock market starts to understand what is going on, and there's going to be panic there too. And they're both going to burn off at the same time simultaneously. Yeah. The debt bubble is supporting the stock market at this time.
Greg, one of the things you've talked about in your videos and in the content that you produce is that the stock market is kind of the facade, the propaganda, and people aren't, it's being underreported, just like you said, this yield curve problem. And, I want to touch on the stock market as well and kind of get your thoughts to see if you think that we might actually break into new highs here. But also, when it comes to the yield curve, is the Fed fighting the perception of an inverted yield curve, or is it something fundamental about the yields being inverted that will be problematic for the economy?
Well, exactly. Well, when you have an inverted curve, that means that there's fear, a lot of fear in the debt market here. And it's just a matter of time before it bleeds off. Again, I believe with the next time we talk, whether it's, a month or whatever it might be, we're gonna see more historic lows with regard to the long end of this curve. This is people that are, again, getting fearful about what may be happening here in other parts of the economy and the stock market as itself. The stock market is an illusion here. And they're going to do whatever they need to do and can do, and things we can't even think about to keep it propped up. For example, this backdoor bailout from the Federal Reserve to the Wall Street banks. They're trying to push up or keep the financial sector propped up so it pulls everything else with it higher. Is it going to work? Are we going to see all new highs? I can't even begin to speculate because nothing is real. If we do see new highs, what would cause that to happen? Again, we're seeing this major move into debt here, which creates, as you are well aware, a risk-on environment. In other words, there's nowhere else for people to put cash, so they look to put it in the stock market. But in my opinion, it's just a matter of time, and it could be days, it could be weeks, it could be months, it could be sooner than that, when, again, the illusion of the markets is unable to be kept alive. Now, we talked about dark pools earlier in the pre-interview here. I have no doubt, none at all, that world central banks are using these secret exchanges, because that's what dark pools are, to buy stock and prop up the market. Now, how can I come up with that? Well, again, we've seen some very interesting goings on here in the market, but I also have a friend of mine. This is a direct source who worked at the NSA for a very long time, and we got into some pretty interesting conversations about this, and he told me straight out that this would happen, that world central banks themselves would get into the market and buy all of this. What do we know is going on in reality without speculating about dark pools? We know that the European Central Bank is not only buying government debt at this time, they're actually buying corporate debt. This is not speculation. Please, people, do a little research into this. The mainstream actually did cover that. So this is how desperate they're getting to try to keep it propped up. And the reason of their desperation here is because we are going to face a resource problem. This is not a financial issue. And I've gone over this at length time and time again. The debt bubble is sustaining a human bubble. I did an article called Global Debt in the Human Bubble. I wrote it a couple years ago, where I explained the correlation between the debt-based economic model and the exploding debt and the population boom around the world which has occurred. if we're unable to continue to borrow from the future like we are now, because at one point this credit card is going to be maxed out, we're going to get a correction in human population, and it's going to be massive. So this is why they're so desperate to keep it propped up. What does it all mean in the grand scheme of things? All this propping up, all of this is, in my opinion, going to lead to a scramble for resources down the line and a war, global war. That's where I think this is all going. Again, let's put another perspective. I know I'm running off at the mouth, but what also is flying under the radar and not getting much media coverage, although it's getting some, is China dumping U.S. treasuries. Why are they doing that? Why are they building up their military? I mean, you got to be blind not to understand this. This is where we're going. And the only people that are in the dark are the zombies out there, which is most of the population, especially here in the United States, where the people are so dumbed down. They can barely walk and chew gum at the same time. These concepts that we're discussing here are so out of the realm of reality for these people to even think about. And there lies the real root core problem, because they're going to wake up at one particular point here, and it's going to be frightening.
Well, seeing what happened with Brexit kind of gives me some hope for the people, and just the fact that they were actually able to get a yes vote, and that the politicians allowed it to go through at least to that extent, gave me some hope in what is left of democracy. But Greg, I want to get your thoughts on that, in the sense that, do you find it interesting that world central banks came in and rescued the markets here when a non-establishment political move took place in Europe, rather than them just allowing it to, collapse and be able to blame it on, whatever, the free market or the fact that, what their agenda was did not go through?
Well, again, the rebound in this market was on speculation that world central banks would step in and do something. What have they done as of yet? I don't know, probably made some promises, but I don't know what they can do here. Again, the only product of world central banks is debt. When you hear anyone on the mainstream financial channels talking about tools that are in the box of world central banks, you're listening to an imbecile. All they do is issue debt in one form or another. Now, they are going to continue to inflate and inflate and inflate. They have no other alternative here. And the market, the stock market, is dependent upon that at this point, because it's not real. And there is going to be a moment when all of this corrects to fair value. It's going to feel like the mother of all collapses, but it's really not. It's just the market achieving a fair value. Here's the truth of all of this, is not just the banks, and we understand what's going on in Europe and Italy today. They're all insolvent and they're all illiquid, including the world central banks. I know how insane that sounds, but I'm gonna urge your listeners to do something here, which will prove to them, beyond any shadow of a doubt, that what I'm saying is true. Just go to the Federal Reserve's own website, federalreserve.org. In the search, put in the total amount of currency in circulation. If they don't feel like doing that, I will tell you what it is. The total amount of printed bills which exist on the earth is 1.4 trillion. 1.4 trillion in printed bills. The rest of it exists in the form of digital currency or debt and credit. That's all. So the system is insolvent. The system is illiquid. The commercial banks claim here in the United States to have 11 trillion in our deposits there. How can that possibly be if there is only 1.4 trillion in actual currency that exists globally? The system is absolutely insolvent, and this is the main problem. And all they're going to do is inflate this. So no matter how you want to look at it, I don't care which way you angle, how you want to cut it, slice it, we're going to face a resource problem. And what are world central banks going to do? They're going to print more cash out of thin air, or are they going to add it to a digital screen? All that will do is devalue the currency further. We face a resource problem again. However you look at it, it's the same ending, and it's going to be ugly.
Yeah, it's criminal. The fractional reserve banking industry is criminal. The fiat money Ponzi scheme. It's criminal, and the way you articulated it there could not have been stated any better. Greg, going back to the Fed giving the banks the green light to buy back their own shares, I mean, the banks are supposed to be lending this money out to the citizens, to the people, and not to sound like a promoter of debt here, but what this is doing is going to help the elites, the top 1% of the 1% here, and talk about the propaganda that this is leading towards, higher stock prices, and really going to help the asset prices rather than the economy. And here we go with the rich getting richer and the poor getting poorer, and this class warfare and all these things that's being perpetuated by the very people that are promoting equality and this propaganda. Again, talk about a little more about the fraud that exists here with this setup and just this one situation, this one example.
It's so big. It's so enormous. And again, you can hear a pin drop if you're trying to get any news about this from the mainstream media. They don't talk about it. I don't know if they're being told to shut their mouths, which I do believe. I think they all read a script. I think they're all actors who probably have some basic knowledge of how the financial markets work, but for the most part, they're gagged. They're not allowed to talk about these things because they can't be that stupid to not understand what we're witnessing here. And you're absolutely right. The green light for the Wall Street banks to go buy back shares of their own stock is only helping the rich. It doesn't help anyone else. It's unbelievable. The Federal Reserve is telling them, buy back your own stocks. Don't lend this cash out. Don't use it to help the economy or create jobs. Buy back shares of your own stock. They have to do it. This is built into what they're doing. Again, the financial institutions cannot function. I mean, they can't function in this interest rate environment that we're in. So you can expect the same thing to happen to other banks all around the world as we're nearing the end of this. The end of this debt-based economic model is upon us. There's no doubt about it. I'm not going to sit here and speculate whether it's going to end today or tomorrow or next week, but we know this. It cannot be sustained. And their actions are so desperate. And again, my biggest thing that I always look at is the debt market. The debt market tells us what is going to happen. And I've never seen anything like this in my life. And I follow this like morning, noon, and night, watching the action in the debt market. Look at what's going on globally. This is a phenomenon which has never been seen before. This move into the quote-unquote debt. There is no safety in debt. The debt can never be paid back. The debt is toxic. We've been hearing about this for years and years. So what's going to happen? Think about it. When institutions realize that the debt is no good. Let's look at Puerto Rico. Let's look at Europe, the European debt crisis. Remember that? Did that ever get fixed? How did they try to fix it? They added more debt to it. We are really, I don't know another way to put it, in a horror show. There's no doubt. And this debt bubble is going to burst. There's no doubt. And when that happens, we're going to face that resource issue I was speaking about earlier. And the ramifications of that are going to be incredible. And it's going to affect every human being on the planet. And there's no way out. There's no possible way that the central banks can fix this. No political party can fix this. It doesn't matter who's in the White House. It cannot be stopped. It's literally like a freight train coming straight at you.
Greg,
and you just got to really hope for the best. There's no way out of it.
Yeah, no, I totally agree with you. You know what? I want to get your thoughts on the currency fluctuations that we've seen. The pound sterling here, is hitting like 31-year lows. The Japanese yen actually strengthened pretty strong against the U.S. dollar here with Brexit, and just all this massive confusion going on in the markets. I mean, any insight from your perspective in terms of what is going on with the currencies, dynamics worldwide, and what that's telling us about the markets?
Absolutely. I mean, it goes back to what we were saying before. And people, it's just a matter of time before they realize that the real value of all of this paper is at zero. And I've been saying forever now, it seems like forever, that people need to, number one, bet against this debt, and number two, become your own central bank. And that means hold a hard asset, hold monetary metals. I'm so sick of people referring to them as precious metals, which I have in the past, but the fact of the matter is these are monetary metals. Now, the currency markets, what are they doing? They always react the same way. It's the knee jerk into this or into that because they're seeking safety. But it's all debt. It's all debt, however you want to look at it. These are not real. None of it. It doesn't even exist. Again, going back to what I said earlier, the Federal Reserve, only 1.4 trillion of actual currency exists. The rest of it is digital. It doesn't, it's an imaginary, it's an illusion. Just like the supposed cash in our bank accounts, the 11 trillion that our banks are supposed to be holding in our deposits is not there. So we're going to continue to see fluctuations in the currency markets, but all of this is going to melt down along with the debt market. If the debt is no good, the currency is no good. It's just a very basic concept. So understand, there's only one way to bet against it, and that is by holding a hard asset, holding a monetary metal. My favorite of them all is silver. I've been saying for years upon years, it is the most undervalued asset in the history of the world. In overnight trading yesterday, the silver hit over $21 an ounce. Gotcha. That's just the beginning. The silver gold ratio is somewhere around 70 to 1 right now. I do believe it's going to go to at least 15 to 1 at one particular time. Gold is going to skyrocket higher. There's no doubt about it. And that's also the environment we're in. We're in a risk-on environment. Imagine when this really turns to risk-off. You can only see, have an inkling of where the precious metals or the monetary metals are going to go.
Yeah, I couldn't have said it better myself. I mean, we're going to see QE now going into a recession rather than as a response to one afterwards. It's happening, rapidly. And, even going back, I know this was a headline a month ago or so, and it took $10 in new debt to create $1 of growth in GDP here in the U.S. And, the situation is rapidly coming to a head here. So, Greg, any more concluding thoughts here before we say goodbye? And of course, let everyone know about traderschoice.net and what they can find if they go and visit your website.
Absolutely. I think people need to continue to watch the bond market. I'm glad you brought that up. I can't stress to people how important it is to watch the movement of cash in these markets and to kind of have an understanding of why we're seeing this phenomenon right now. It's sending a very ominous signal that Wall Street is not listening to at this point. Also, the monetary metals are sending a monumental message that should be listened to. It must be listened to with regard to what's coming down the line here, what we can expect with regard to the stock market as well. Just a matter of time before all of this normalizes. There is no doubt about it, and it's going to be incredible. What I do hope people take advantage of real quick, on my website I have an absolutely free chat room there. A lot of very smart people in there that are discussing the same topics that we're talking about. They do this every day, 24 hours a day. I set this up for that reason, for like-minded people to get in there. You should check it out yourself. People would probably love to hear from you.
Yeah.
Yeah,
absolutely, sir. Yeah, no, I appreciate it again for coming on the show and just giving us your insight. And man, you always get me fired up whenever you start talking about, the fraud and the scams and, everything that's going on globally. And, it's really, you're one of the few that's sharing this information and getting the word out there. So it's very much appreciated. And, everyone go and check out traderschoice.net if you want more information and, want more of Greg Mannarino. So, Greg, thanks for coming on the show with me today.
Been great. Thank you for having me again.